the Aussie pairs, which is the Euro Aussie. That has been really one of the trades, a brilliant trade. It has been working like a charm. We started buying it above the 117.74. It is now 122.83. And one of the sad things that I have to say about this trade, it's magnificent, but this is when people, this is what explains the short covering rally. One of the people that are with us in this room took it short from a long-term position at took the short at 123 from the long-term trade, right there from the 126. She actually took it short from 125.74. But she fell in love with the trade. And if you remember, many times I said, if we're going to go up, it's going to get to the 121.33. This is when the short covering is going to explode. Get out, get out. Now we got to the 121.33, and this thing, now it is at 122. That 200 pip move in 2 days, this is now where the late guys, the people that fell in love with the short position, that they still don't believe that this thing is going to go up, because everybody's still singing the doom and the gloom of the euro on the internet and saying that this thing should, yes, that Greece should come down and Europe, whatever the fundamental reason is, has nothing to do with what's happening in the market. If you're getting a short covering rally, this is the time where you have to go out, because the market doesn't have the same logic that an analyst has. Logic, this is an illogical beast that is following the emotions of people that have money in the market. They want to protect their money or their assets. And the late guys, and this is for us, we have lived this experience. She took it short. She refused to get out with the long term, and she stayed with it, stayed with it, stayed with it. Now, I get an email this morning, Mike, it's at 122.83. What can I do? My heart goes out to her, but what more can I say? I mean, I cannot. So, for us, let's learn the lesson. When you see a short covering rally and you identify, we must take action. We cannot wait, and then we don't fall in love with our trades. We take our entry signal from a technical point and we exit from a technical point. And the more we get in and we get out, that will build up on our equity. So instead of having 1,000 pip profit on a trade, now you have 300 or 400 pips profit on the trade. And this, what you see here, that is short covering. Nothing has changed. The trend is still to the downside. We're still looking to be shorting the Euro Aussie, but because we don't have, all what we have is a minor. So we want still now, for a new trade, we still want to be long the Euro Aussie, simply because it's in the condition we're in, the way we're trading the Euro Aussie, it is a short covering rally. So we want to be long. We're going to be slow in going short. And you guys remember when we were trading the other day, it went up to the 131 and it capitulated and then turned back the other day and went up. This is part of the people that don't believe that what happens at or above the structure. And you can see this capitulation that we had this morning. These are the stubborn people. These are the guys that already have very big positions on the short side. They are your hedge funds, they are your banks, they are the guys that have clients and they have big size to come in, and they are just selling. They say, okay, this is high enough, let me sell. And they, when they come in and sell, they move the market 30, 40, 50 pips. And the same thing happened the other day when we were short in the morning, right there. This was the other day when we were together in the room. This is the same setup. These are just big guys that say, okay, now this is too high, it's too expensive, let me short. And they come in with size and they push it down, but then the market stops, and when it comes back again and you can see what they did, you start taking advantage and buying again, because the market is always right. And now it will take us up, it will take us up, and it will, whatever they do, you're staying with the short covering rally, because this is now where the market is willing to go. And let them play their games. You're not interested. Whatever they push and it stops, you still want to be a buyer. They push it down, it stops, you still want to be a buyer. And the same thing is happening this morning, because again the market is thin. And that pushback here that you see in this session, even though it might look like a big push, we're not interested in looking to go short, because the guys that covering the shorts are much bigger in size and volume than the ones that are actually initiate. This is a new short coming into the market. These are the old shorts that are protecting their profits. And these are much more powerful and much more have a bigger presence in the market today than the new shorts. So we want to stay with these guys that are going to be covering their shorts. So with that, we are, if we look at the intraday, I don't want to go even consider shorting the Euro Aussie unless it trades below the 122.30, which is 100 pips above the 122.33, above our long entry. So we're not going to go short unless it trades below. And this is the number we were going to go long from last week, from 120. So from right here, we're going to go short below 122.30. And if I short it over here, again, because I'm in a short covering rally, I'm not going to give it too much room to go against me. So my stop is going to be pretty much right here above 122.50. So my short stop is going to be 122, let's say 55. I'm going to give it like a 25 pip stop, simply because it's a counter trend trade. And let me find the structural long point. There's no structural long point anywhere that I can see. We have already above that. $123.95. Okay, so the next structure point up there, this is where the market should be going towards, is the 123.95. So my next structural long point is the 123.95. What am I doing? Oh, I should have taken the short. The structure short point, I got confused. I did the long before the short. The structure short point in this case is the 121.33. I don't know why I did that structure long point. Anyway, so let's recap this. I hope I didn't confuse you guys. So we are only going to go short below 122.30, which is the daily high. And if I do, the next structure short point is the 121.33, which is right here, which was the break that we took up a couple of days ago. And my stop on the short is 122.55. On the long side, the next structure long point is the 123.95. And where will I buy it right now? This is the, if you don't have the day trading software, you're going to take it long above the high of the day, which is the 123. 123.74. So we're going to buy it above the one, and our stop, this is how far they pushed it in the intraday, and therefore we're going to put our stop below the 124.70, 122.70. I just give me a sec. Okay, so let me, let me reorganize my thought again. So for the Euro Aussie, we're going to buy above the high of the day, and therefore our buying point is going to be the 123.07. And if I do, I'm looking at a structure long point at 123.95. So we can travel all the way to 123.95. And our stop on the long position is, I'm going to put my stop below the 122.70, which is below the opening range. On the short side, I'm only going to go short below 122.30, and if I do, my stop is going to be 20 pips above it here, so it's going to be above 122.55. And my structure short point is going to be the one that we looked at, which was the structure long point from last week, which is the 121.33. Okay, so this is the Euro Aussie. Let me save that, and then we can move forward. Took a little bit longer than what I expected, but